Good day all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for the end of trading. We're not there. We're actually in the beginning of trading for Thursday, but it was the end of trading for Wednesday, September 18th, 2019. And as you already know, we've seen the Fed reaction. The Fed cut rates by a quarter point. They actually made some adjustments to take care of the repo issue that happened on Monday and Tuesday. They've reopened open market operations. These are terms many people know nothing about. They were very popular a decade ago or longer, and now those terms have fallen away, and it's a cash operation for Treasuries between bond dealers and the Fed. Think of it that way. It has nothing to do with saying the Fed is out of money, the economy's out of money. It has to do with certain operations that use cash in a certain way. Now, what we saw was the Fed do as the market was thinking. They cut a quarter point. Obviously, the Fed isn't committing to what they're going to do going forward. Out of the 10 voting members, 3 did not agree with this. 2 didn't want any cut at all, and 1 wanted a half-point cut. So we've got good dissension, as Mr. Powell said. Of course, the president hated it. Not enough, not fast enough. The Fed doesn't know what it's doing. Okay. But the stock market came roaring back, and it's up a fraction tonight. It was down. It came back. We've seen plays with the energy market where the U.S. Very quiet about wanting to do anything against Iran other than more sanctions. That's a change. We've seen the Houthis in Yemen say that they now have the United Arab Emirates targeted in, and that their new drones, which are jet-powered and traditional powered, they can go anywhere and do any type of damage. Okay, problem is, so far, Saudi Arabia and the U.S. don't think those drones came from there, but who knows? Let's get back to the markets. In the markets, you can see that right now, the market is at 30.0675, all of about 18 points away from an all-time high of 30.2450. There's very little to stop this market. We've heard recession talk, we've heard rate cuts, we've heard the chase to the bottom on interest rates, which is still going on in certain parts of the world, and we've joined in. There's 3 more central banks this week, I believe. The Swiss National Bank, the Bank of England, Bank of Japan. They have to make their decisions on what they're going to do. Of the group, maybe the Bank of Japan's got the best chance of cutting a rate. But in any case, you've gone straight up from 28.55, 58. This is a closing basis chart only, not the highs of the move, just closing basis. When we come back to the daily bar chart, which does include highs and lows, you see the resistance up here. We're back into that. We have filled the gap. I mentioned that yesterday. We had an outside day up today. That's important. But let's see what the pattern is on that. We have a pattern of a lower low and a higher high. So we have some distribution of price going on, and we've seen that for the past 5 days. We have key moving averages lined up bullish. We have the 18-day average in red over the 100-day, the 100s over the 200, and the market staying over all 3. That is bullish, gives you bullish bias. You had run against the upper Bollinger Band, and now a week before today's FOMC meeting, you stalled out. Now you're going sideways in the market. So you don't have a trend on the swing line, but you have upside bias. When I come over to the slow stochastic, this rules the day. And I think I've given you the hierarchy before. This is the strongest indicator when it's embedded. It's also a powerhouse when it loses an embedded status. And other than that, it's a signal that I really like for overbought, oversold, and is momentum up or down. This is locked in bullish until the red line closes under 80. It tells me that on these breaks, I expect to see the pros buying the market. When I look at the NASDAQ, it is flirting with losing that embedded reading. Now, flirting isn't losing it. Flirting is just that. You're in the bus. Hi, how are you? So as the market's coming up here, we still have an uptrend. The market tonight, 79.25.75. The high during the day of Wednesday was 79.29.50. We're not quite over that, but you have the outside day up. The warning sign on this market, you already see you're at 80.07 on this the slow stochastic. So With the low today of 79.1750, anything under that probably loses the embedded reading, and you'd have to get back up to get over that. In fact, there's 79.18 and you're at 80.01. This is not one of the stronger powerhouses now. The Dow is. You're not even trying to lose the embedded reading. The market had an outside day up, unlike the other market, which doesn't have the swing line in an uptrend. This does. Higher lows, higher highs. Until this is lost, under 80, I think this is a powerhouse still to the upside. And in the Russell, this market has not lost its embedded reading. It could at any point, but it hasn't. The two that I'm most concerned with, number one is the NASDAQ. This would be a distant number two, and of course the other markets look good. Even though the swing line is down, what takes precedent? The slow stochastic. What else is happening on this chart? Because you've got to learn to study them. If you take a look, the 18-day average is getting over the 200. That just happened tonight. This is how the market finished on Wednesday. This is where it's at now. Now, if this keeps marching higher, what happens is that when the 18 gets over the 100, moving average theorists will likely say that our chartists, you got a new swing, you've got the right momentum and lineup of moving averages where the shorter terms over the medium and the medium term is over the longer term. It's the first phase of it right now trying to occur. In the VIX, this market's still on the downside. The market stochastics are still pointing down. They're, as you can see, embedded down here. This market is still getting sold on the rallies. If it gets down to the lower Bollinger Band, I would look for support to come in there. In the bond market, you can see that the market had gotten itself, in fact, we should look at this. This was, I don't want to go to today, I want to go to Wednesday. This is how the market finished on Wednesday. This is where the market was on Tuesday, and you were this way on Monday. So you had an embedded reading. Do you see that? Tonight, you're trying to lose that embedded reading. When that occurs, it's often, not always, the word is often, a sign that price and the 18-day average want to come together, so maybe more of a rally coming in that market. In the 10-year notes, when I come over to this, you can see, and I'm going to come back to yesterday just the way, both numbers under 20, both under 20, both under 20. So until that one is lost, you're not getting that signal. So you've got some divergence happening in the different sectors of the interest rate cycle. If it loses the embedded reading, then I'll look for price and the 18-day average to come together. Right now, I think the pros are selling this market because it's still embedded and they've gotten through a Fed announcement of a lower cut. In TLT, you have the embedded reading here. You haven't lost it yet. You've got the lower highs, lower lows. You've had a correction. What we're really saying is you may get a bounce in interest rates, but nothing here is pointing to uptrends. They're all still in downtrends. Downtrends means higher rates. They do an inversion with each other, the real yield and what the futures do. In the dollar index, I'm tired of saying how many days in a row we're fighting against this 18-day average. It doesn't stop. Now you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 in a row, 2 weeks of trading have hit the 18-day average. If you're trying to play for a move that gets away from it, you've been sadly disappointed. You're not trending yet in that. When we come to the eurocurrency, it's back under the 18-day average. Now, what did happen today is the swing line turned up. You have higher lows and higher highs. Unless you take out Wednesday's low, and let me bring Wednesday. If you took out Wednesday's low, I could argue you'd have lower highs. You're not there. You just opened tonight. Momentum sort of flat. In order to be bullish this currency, you need it to stay over the 18-day average of closes. You have the other parts of that. That important part's not there. Trying to trade the pound, very difficult because you know they're in court. I think tomorrow's the last court day. They gave 3 days for the trial that I understand, where they're trying to figure out, did Boris Johnson, the Prime Minister, do the right thing? And if you will, going on recess for Parliament, let's use that word, until October 17th. If the Supreme Court finds against him that he did the wrong thing, he has to call Parliament back in and the Brexit talks begin. But each day that he doesn't get his way, what's been happening, is we're seeing the pound rally, not break. So it's telling you that the market likes just where it's at, not the idea that they'll break out of it without a deal. So that's where you're at on this. The embedded reading, until that's lost, throw the name off the chart. I would look for very solid resistance, though, between 125.95 to 29.90 to 25.99, the 100-day, and the upper Bollinger. So any more of a rally, I think pros will take money off the table. They might even do it tomorrow, waiting to see if the court, which says it could issue a ruling as early as Friday, get out ahead of that. In the end, it's just falling away. People don't need the safe haven the yen is offering. We've already seen an attack on Saudi Arabia. Not much happened here. You got a little blip in the market to the 100-day average, and in looking back, that was the place to go short with the embedded reading. Not happy there. Lower highs, lower lows, still bearish as can be. Bitcoin just sitting, like the dollar index, just sitting on this moving average day after day, narrowing in the trading range, momentum gone flat, not much you can say about it just yet. Now, the differential between Brent and WTI spiked up that one day of the attack on the Saudi oil fields and their refinery, and has since slipped back about 70 cents or so. The market is coming into support at the 100-day average of closes. The 18-day average is trying to get up to it. When we come to WTI, and by the way, this is not a trend. It's certainly a vertical price rise off of that event, but you have a lower low, higher high. It did not hold over the upper Bollinger Band. I mean, the pros that took money against that, they probably were kicking themselves really hard that day. The very next day, by the end, they were smiling because market came right back to them, and now it's lower. WTI, momentum down, bias up. You're narrowing in two moving averages. You're doing the same thing here, just a little wider, the 100 and the 18-day as well. Gasoline slipping back, momentum pointing down. Momentum often leads price. The trend is up. First supports the 160 level, the 100-day average. If that gives way in much of a manner here, then you might get to the 150, let's call it 155.60 level. I would say the 100-day average is what people are looking at right now for support. And in the nat gas, first of all, the nat gas is flowing from what I understand again in Saudi Arabia, but does it matter? We're dealing here with our nat gas, and there's plenty of it, but you're still very much in an uptrend. Keep your eye on the slow stochastic. If it turns down by the red line under 80, it's probably a sign that price and the 18-day average of closes want to make a run at each other one more time. You know, I talk about this early in the morning, and with these markets as volatile, I get letters from people. I'm talking emails, actually. And they'll say, this helped me so much in the morning, blah, blah, blah. I love what I'm doing there, and it opens the eye. And that's because I start recording at 6 a.m. Central Daylight Time while I'm still home. So I put on a headset. I'm not in the videos like this, lucky for you. And what is going on there is I'm able to give you each morning the ideas, because I'm up by 4:35 and I've read what's going on in Asia, Europe, and the like. And I'm going to cover for you typically 40 futures charts, 5 ETFs. No, I don't expect you to look at all this. It's a lot. But I do it in a certain way so you can get where you want in the sectors that you want, be it the metal, be it the interest rates. It's like you're sitting by my side and we just swipe the bottom of the video and it's going to light up and say, oh, there's the metal sector. There's the energy sector. Where do you want to be? And I do this always in the same sequence. So once you've tried a few of them, you get it. Do you have to look at them every day? No, but let's talk about this. The idea is to give you ideas. This is what I'm seeing from an impartial point of view. I have nothing to gain or lose when I'm putting this out. It's that simple. I'm giving you what I'm seeing on the chart, and yes, I'm going to be wrong, if that's what you want to hear. Yes, I'm going to be right if that's what you want to hear. But I think I'm a darn good chartist, and I think you'll see that what I bring to you are ideas on charting. And as I said, you're going to get them in this sequence. There'll be a slide bar here, and it lights up and tells you where you're at. If that's too difficult, all the names are on the side right here on your chart. Click one of those, and you'll be where you want to go. Expensive? Absolutely not. If I'm getting up that hour, I want to be paid something. So you're a metals trader. It's one tick. This is $7.95 for the first 30 days. One tick is $10. You're an S&P trader. One tick is $50. This is $7.95 for the first 30 days. You also get with it our handheld application for your iPhone or your Android phone. So now you're seeing quotes, charts, you're getting our other news, and this will have a push notification that tells you when I put out the video for you. Click it. You can either watch it on your phone, you can watch it on our website, either spot. That application alone, without a subscription to my research, is $40 a month. With it, it's free. $7.95 to give it a try. Come on. www.iepstein.com. Go to research or education. Give it a click. Give it a try. And by the way, when you're in there, it'll explain how this whole thing works. You can also click right up here. If you're watching me on YouTube, it'll take you right there. I'm Ira Epstein. You have a great day. I will talk to you all tomorrow.